I have an extremely ambitious show for you guys today. We're going to talk about the macro events that are driving Bitcoin and crypto. I'm going to talk to you guys about some of the Bitcoin news events of extreme interest to me right now. We're going to talk about some technicals. What exactly is it that, how is Bitcoin sitting right now? I'm going to give you my opinion as to where we will go, whether or not the top is in, and exactly when I'm going to buy. I spent a ton of time analyzing charts and considering this topic to bring to you guys today. I haven't talked much about Bitcoin and crypto because it's been coming down, and the fact is it's been bleeding off, and I didn't believe that the move was up. So I'm going to be highlighting a more specific plan for you guys today. And I'm going to answer the question, should I sell all my worthless alts? That's a question for you guys, not a question for me, because you know I dumped my alts at the end of November. So let's kick things off. Let's welcome Mark from Tribal Trades. Welcome, Mark. Appreciate you being in here today.
Hey, Josh. Thanks for having me on the show. As always, a pleasure and an honor to be here. Thank you so much.
Thank you for being here. Guys, hit the like for me right now. And if you're brand new to this page, hit the subscribe, because I can tell you that a lot of people need help trying to figure out what to do in this macro environment, in this investment environment for both their stocks and their crypto. And a lot of people, you know, I'm not gonna beat up on any other YouTubers or any other influencers, but I've seen a lot of noise out there, and a lot of people who get hyped up, they get carried away by the narrative, and they simply don't trade the chart in front of them. And, you know, most of the time with crypto, it's driven more than stocks by extreme greed or extreme fear. Now, we're getting ready to get into a critical moment. The S&P 500 today dropped nearly 4%. And the closest comparison to a single day drop like that was during the COVID 2020 crisis. And now I've made this reference many times before over the last couple months that we saw one of the fastest falls from all-time highs that's only comparable to COVID as well. So we've got two big COVID comparisons going on this bearish market. And I'm going to tell you guys what I think is going to happen. This isn't the point of this video, but I'm just going to tell you that we are making a sharp, tight downward move with very little consolidating periods, with a consistent trend down. What is that ultimately going to lead? It's going to lead to a crash. It's going to lead to potential gap down days. It's going to lead to a very similar environment as COVID. Now, this is actually phenomenally good and exciting news, because if you have some cash, and some folks are sitting on the sideline, they don't have any cash, but if you have some cash, I do believe that this year in 2025, we're going to see all the characteristics are the same of 2020. We're going to see this rapid sell-off, this fear-driven capitulation moment, and then institutional buyers are simply going to step in because it doesn't make sense. There's nowhere near the data to justify the fear, and we're going to get a V-shape. And the fact that we didn't stop longer and consolidate along the way like we did in 2022 is actually really good news. The fact that we didn't get up to 590 and backtest it 3 times before ultimately breaking down is actually really good news. The fact that this is characteristically more like 2020 than 2022, in my mind, is setting up for a rare investment opportunity for stocks and crypto. So, in my opinion, this is an important video. I've got a lot to cover. I'm going to talk a little bit about the tariffs. I want to put some perspective on everybody's view regarding the global economy, because I see all these comments and I see all these statements, and a lot of them just tell me that people are not aware of the true dynamics surrounding this World War tariff. People are all caught up thinking it's a big orange man battle, and I'm not saying that to mean any disrespect. I'm simply talking about where people's focus is. They're more focused on Donald Trump than they are on what all of this means and where all of this is leading and how it's going to affect them financially. I could care less about the politics. You know, that's a whole other conversation. This is not a political show, it's a financial show. But what this situation is doing is it's setting up for us an opportunity to make some money, and I am excited about that. Hit the like for me, please. All right, guys. Now, this morning, I have to quickly address something for the Stocks with Josh Discord. I attempted a live trade show on a new platform. All the bugs were not worked out. So tomorrow, when I do the live trade session, everybody's going to be included. It's not just going to be for top tier members. Me and Michael will do another live trade, and hopefully we'll make some money. While we were doing the setup, I still managed to get a 30% profit on a call right at the open as we popped. And then I was able to get a 30% profit on a put on the way down. And the truth be told, even though I'd only been on for 20 minutes, I was financially done for the day. I had hit my goals very quickly.
Yeah.
I would have stayed on to trade with you guys, but didn't have a chance. But I did hear Michael texted me later. We talked a couple times, and he said that he lined up at least 3 or 4 really nice wins for you guys when he did his live. So everybody should be making money. If you don't know what I'm talking about the Stocks with Josh Discord. Come check it out. I'll leave a link in the top pinned comment for you guys to come and join. JD, thank you. Got a super chat. Got my first win today trading options with the INTC call. 500% on my birthday, which is today. Appreciate the call, my brother. Awesome. Congratulations. That was huge. I did a quick overview on INTC, some technicals in the GOAT Alerts channel, and I'm super excited. This is one that we've been holding on to because it is really actually been doing well. This is a crypto show, but I got to talk about the fact that Palantir's holding up really well. Tesla's holding up really well. The term relative strength is defining a number of companies that aren't breaking down, and they're not even lower than their recent low. And so that's what we got to be paying attention to on the stock side. And what's interesting is let's compare that to crypto right now. Bitcoin has not made a new low yet, and the alts fell, a lot of them in what I would consider winter pricing. Real quick, Mark, explain to the fam what winter pricing is. What's typical winter pricing for crypto?
Well, winter pricing is when a crypto will get down to the 200-week moving average. Generally, in a bear market, you look and think where to buy, and you think, okay, we're going to buy at the 200-week moving average. And Ethereum's already below that, and some other coins are heading down there. And it just shows you the big gap. Never in history, and of course, Bitcoin, altcoins don't have a huge history, less than a decade with altcoins, has Bitcoin been more decoupled from the altcoin market. The gap is getting bigger and bigger. Bitcoin dominance is surging as people are moving more and more into Bitcoin and away from the altcoin market. That doesn't mean that altcoin can't have their moment, but we certainly are seeing some pretty low prices down there for some of these tokens. And some are performing better than others, of course. Some are performing a lot stronger, but there are certainly some altcoins that most probably have already seen their all-time high for the cycle, like we saw. And that's if we don't go into a bear market early, because in 2013, we went into a bear market 12 months after the halving. Yet in the last 2 bull markets, 2017, 2021, we went into a bear market after 18 months of the halving. Now, if we were to be, this bull run was to be like 2013, then the bear market would start in April, because the halving was 12 months ago in April of 2024. Let's hope that's not the case, especially for those holding still a bunch of altcoin bags in loss, because altcoins lose that 90%. But even if we do go on and make a new all-time high for Bitcoin and the bull market does resume, historically, most altcoins they've topped out for this cycle already. Just like Dogecoin in May of 2021, it topped out and didn't continue on with Bitcoin up to that November 2021 top. So a lot of warning signs there for your altcoins, thinking that, the Bitcoin bull run will resume. That doesn't necessarily mean that all the altcoins will go with it. Only some will. Most will go down and lose over 90%. And in fact, most will just go down to zero and will never recover. And that is the big warning and the big thing that people should consider when they think about crypto, Bitcoin, and the altcoin market.
Yes, yes. Quite a bit to unpack there. Great answer. We're going to dive into the alts and Bitcoin dominance. I'm going to dive into that answer a bit more, but I'm going to follow through on my topic points. But great overview, Mark. Real quick, guys, if you want to subscribe to Mark's page, he's got his own YouTube channel. You can go over to Tribal Trades. Go support this guy. I think he's got great insights in the market, in the crypto market. And he always adds value. That's why he's on the show with me today. Okay, let's talk a bit about the macro environment that we're in. You know, gold is at $3,100 a troy ounce, and it's showing itself. It's really flexing. Imagine these big gold, veiny, rippling muscles as it's flexing and staring at Bitcoin saying, I'm the hedge, baby. I'm the hedge. So this is not part of the narrative. So the macro environment is that we're in extreme fear and everyone is running not to Bitcoin and not to the alts. I don't want to tongue in cheek say the worthless alts, but they're not running. They're not running to Bitcoin. They're running to gold. Gold is peaking at an all-time high. The gold rush guys are checking their safes to get that gold glow out of the door to remind themselves how rich they are today. The stock market has dropped $5.5 trillion in a very, very short amount of time. Not picking on Trump, but I got to acknowledge he threw out the 200 to 300 billion that we were going to pick up through the tariff war. And in the back of my mind, I'm thinking, brother, 4 to 5 trillion, we're down right now. Let's throw them that 200 to 300 billion dollar tip and let's get the stock market back up. I don't fill my comments with negative politic comments. People love to guess my political view. They tell me, oh, Josh, you love the orange guy, or oh, Josh, you hate the guy. It's so obvious. I don't ever make any comments. All I'm trying to say is that gold is winning. Bitcoin is at best holding steady and the stock market is suffering. Now, let's talk a minute about the tariff war because I want to shed some light on how I think the tariff war will turn out. A lot of people are scared because they don't know the basic economics of the way the world runs. They don't know what I'm about to lay out for you guys in 3 simple facts about American economic dominance globally. So right off the bat, you know, we are the customer. So this whole conversation about tariffs is what we sell to other countries and what other countries sell to us. And so to basically have an understanding of what that looks like, the first thing that you need to understand is we are the customer. United States consumption is 18 trillion 822 billion. So we'll just round it up and call it 19 trillion. And then China, the economic power force that is the China, how do they call it? The CCP, okay, is only 6.9 trillion. So right off the bat, they are way less than American consumption, okay? We are dominating. We are the large customer there. And then underneath them, you're looking at Germany at 2 trillion. India, massive country, billions of people. You're like, well, they've got to be doing some consuming over there. Nope. They're smaller than Germany with $2 trillion of consumption. And then England, $2 trillion. France. Now, don't get offended. I got French followers. I ran into a guy right in front of the Notre Dame church, crossing the bridge, and he's like, stocks with Josh. So no offense, but France is a little bitty baby consumer at 1.6 trillion. Brazil, 1.3 trillion. Italy, 1.3. Mexico, 1.2, compared to our nearly $19 trillion of consumption. We're a huge player for these people. Their economies, many of their economies, specifically Canada and Mexico, literally, they make a living off of selling us goods, services, and power. Okay, so let's keep it into perspective. When Donald Trump starts saying it's time to come to the table and negotiate, the fact is that we do have the power. We have the power of the deal. All right, so what does that mean? Let's keep going. Let's talk about GDP. I want to compliment the American people for being the hardest working nation on the face of the earth. And you say, well, Josh, you know, those Chinese folks are working really hard over there. They make a lot of goods. Every time I flip up a cup or I look at a t-shirt, it says made in China. They're not working as hard as you, the American worker, the American labor. The United States GDP is $29 trillion. And the European Union, if you combine all the European countries into one, we're talking everybody over there in Europe, the previously largest pocket of Western civilization on the face of the earth. You say, well, they'll beat us then. No, we're still number one. They're 18.8 trillion. You say, okay, well, China's definitely doing a lot of work. You know, their GDP's up there. Nope, 18 trillion. Japan, a very respectable 4 trillion. Germany, 4 trillion. India, just under 4 trillion. United Kingdom, 3.6, and it goes on decline after that. You guys are the ones working and producing and creating and selling and buying. And so there's a lot of power in that position, and somebody should protect it. Okay. I know this video is going to be disruptive. Some people are not going to like what I'm saying. And now we're going to talk about sheer wealth. Who's the richest? Who's the richest? Who's the richest people in town? Now, this gets really complicated because there are some extremely rich countries that have very, very small population. But if you compare the United States to any large country, the U.S. median household income is $75,000 for 2024. And globally, the median household income per purchasing power, adjusted per purchasing power, is $9,700. So we are nearly 7 times wealthier than the average working class or middle class person in the world. The middle class is actually 7 to 8 times wealthier than the global median. And if you go down to the actual pocketbook, the median net wealth per adult in the United States, based on 2023 outcome, is $108,000, and they're worth $500,000. And compare that to the global median net wealth per adult is $8,000. Now, that's a lot to digest. Why did I break all that down? Am I pounding the American chest? A little bit. I also want people to respect and realize, as they lose perspective of the global economy, how unique the American nation is, both in its consumption, its work, and its wealth. It's in an absolute league of its own. And the fact is, it gives it the right to do some negotiation. And we've done none for decades. And we've got people that want to come to our house and sell us goods. But when we try to go over there and sell them something, they've got tariffs from 60 to 95% on what it is that we would like to sell them. That's nowhere near sensible, and it's got to get worked out. Now, all of this works together for our good, because the bottom line is it will crash the market. We're going down lower. But I believe that we're going to quickly see these deals get worked out, because they have to work out these deals. I said that before on a show, and I had about 8 to 10 people correct me and give me false statistics. That's what drove me to go clarify and look up these statistics. These were not even from the United States. These were from various sources around the world, different countries' statistics, as well as the United States. And the point is, they're going to come to the table. And we're going to see this get worked out. And I think we're going to see a V-shaped recovery. I get on retail a lot for wanting V-shaped recoveries. And I often say, not everything's going to be a V-shaped recovery. I'm going to go out on a limb and make the prediction that 2025 will be a V-shaped recovery. Now, I could be wrong, okay? But I'm going to put my money to work. I'm putting my money to work, and I'm getting ready to talk to you guys about that in the crypto space. Let me pause for a minute and let my Kiwi friend who loves this country. You say whatever you want, man. If you feel like I need to get corrected, you correct me, man. You let me know what you think.
No, I think some perspective is important, and I don't think we should fear the volatility. I think we need to make sure we take advantage of it, because I think fear is what leads people to make poor decisions. They buy the top, they sell the bottom, rather than learning and creating new skills during this time of volatility. Trade the volatility, make money on the pumps up, open your long positions, and when you see some decline in the market, open up those short positions and make money on the way down. And even if we were to go into a bear market for crypto, the ability to be able to make money on the way down is very important, particularly maybe for people that are in loss in their portfolio. They're down on a lot of coins. This can really help you recover some of those losses. It can help you have money to buy those bear market lows that will come in. I mean, I know that I managed to buy Solana at $12. Sold it at around $2.95. Who else would have liked to have bought Solana at $12? I'm sure some of you did, and that's great. But those are the opportunities that are there. And I've often said the millionaires are made in the bear markets, because you can really ride that. The capitulation is quite quick compared to how long it takes to get up. The market can move very quickly to the downside, and you can just open up a position, write it down, take your profits, have that money to buy in the bear market. So I don't think we should be afraid of the volatility. Same in the stock market. I'm welcoming. Look, I think it's tough that stocks are losing value and that people's portfolios are going down, and it can be troublesome for some. But I see always that silver lining, that opportunity to buy these dips. And I'm not going in heavy. I'm nibbling, as you would say, Josh. That's a word now that you've coined that phrase, and I'm starting to use it now. But just nibbling a little bit in stocks and just picking up some on those discounts. And of course, tomorrow, news could come out that all the tariffs are over and everybody's made peace and shaken hands. And I do think at some point the Fed is going to cut some interest rates, and we are going to see some quantitative easing. So I would agree with you regarding that V-shaped recovery. I do think we are going to see a nice move to the upside. But I remember the yen cash carry trade back August, September. Everybody was freaking out. And there we were in the Discord buying up crypto and stocks, Sui was 46 cents and Potenza Tau was, under $200, and, the Coinbase stock was under 100. I think, NVIDIA was low, everything was low. And it was just, in winter, you stock up. Because if you don't buy the dips, you don't deserve the rips. And that doesn't mean that you buy a dip that keeps dipping. But I think some perspective that you're adding, I think, is very, very important. That these opportunities, when you have such a huge run in the stock market and in crypto, Bitcoin from 15,000 to 109,000, that these market corrections are healthy to bring in new money into the market, new buyers. And I've been waiting for these dips so that I could go in and dip into the dip and add some stocks to my bag, because I was mostly in cash after January, sold out of most stocks, as you accurately, boldly sold all of your crypto except Bitcoin up near the top. And if we go into a bear market, that move is going to look more and more genius. I didn't quite get it that right. I took all my profits up there, but obviously I was able to sell, and I'm still only in Bitcoin and just trading, traders market. And I think for many weeks we shared with people how we felt it was a traders market rather than an investors market. So no, I would agree with you there. And I think there's a lot more positive things to be seen from this, and just to trade that volatility and not to fear it.
Yeah, to be clear, guys, my bullishness is in the light of the fact that I believe that we are steadily and strongly moving down, and we have not seen, in my view, the capitulation just yet. I don't think we've got the data to reverse, and so I can't say whether we're halfway down the V. I can't say whether we're 3/4 of the way down the V. I can just tell you that we're not at the bottom of the V yet. We don't have the volume and the candles, and the market doesn't have the data. So I am predicting that we are going to V here with more room down. I want to quickly cover. Thank you, Mark, for everything that you had shared. I'm going to hear from you guys and quickly respond to you guys. Samantha White says the data would be skewed for median household by poorer countries. The data was considered for anybody that was working full time in an industrialized country. And Alan Rodriguez says, and how's the cost of living in the US compared to those other countries? Believe it or not, that was the most fascinating part of my research that I did this afternoon, is that we pay less for almost everything. It's the ability to get goods of any kind in certain countries is much harder than you think. There's a lot of restriction between countries. A lot more people are allowing free, trade to flow between us and them, but there's more restriction between countries, especially ones that are close to each other. And so actually we pay very little. I learned that the first time I went to Europe a long time ago when they were selling gas. I think it was at a liter. And I was like, well, how many liters in a gallon here? And I realized that it was like $20, $20 a gallon. I mean, they weren't even selling it by the gallon. They were selling it by the liter. So yes, we actually we pay very little, believe it or not. Nishit Eder said, for the first time, I felt Josh is wrong in that initial speech. Could be, could be that I didn't get it all right. I will tell you that is the facts from World Economic Forum had the similar facts. So that was less of my speech and more, in my opinion, the facts. Now, I did put some interpretation, but the only interpretation I put in there was that I think people need to negotiate with us. JH says the bull market is over. Warren Buffett was right about selling. Again, never doubt the old man. Now, I agree. I kind of agree with this idea. Warren Buffett was right about getting out. And the truth is, he got out at the top. He cashed up and he's waiting for that apocalyptic V that I'm referring to. And I believe that you'll begin to hear about him adding to some positions here. But he knows when the storm is coming, and that's what got him out. Mark Wagner said, you are very astute, but step up your communications game, which he feels that I didn't say it right. And then Femi said, your analysis requires a bit more nuance and less bravado, perhaps. Okay. Appreciate all the feedback, guys. All right, let's get into some news events right now that I think are quite interesting. And that's that we've got Elizabeth Warren. And of course, this is slightly political, which I feel like maybe I should get off the political stuff. But Elizabeth Warren made a request of the SEC to begin to find out and keep track, not to lose any records of what's going on with Liberty Financial. And this, why am I mentioning this? Is it to dive deeper into political events? No. But I will tell you that I believe that, and, I'll get Mark's opinion, Donald Trump's, Trump coin, and then the Melania coin, and then it was followed up by, the Libra coin. That was a disaster. It was really bad for crypto. And I think that at some point, this is going to come back to bite him, and it's going to come back to bite crypto as well. It could be the basis of another impeachment attempt. Now, right at the moment, they don't have the power to push that through. But, in the course of time, when the House changes, these types of things will begin to materialize. They'll begin to dominate the news. And so it's one of the other reasons why Donald Trump has to be very, very quick with his goals. So I saw that as a sort of a subtle undercurrent news story that they're building a case and they're focusing on Liberty Financial, and it's going to be a big event in the future. Mark, did you have any comment on that?
Yeah, no, I agree with you. It just felt like, in hindsight, especially, a bit of a top in the market, and it was. And when all those meme coins came out, Trump, Melania, and what was the other one? The Libra token, the worst of them. At least that one was over in Argentina, but I think it was some of the same people were behind it.
Yes, it was.
Very sad. It sucked a lot of liquidity out of the market. It was very surprising that it happened. And even Eric Trump tweeting about, buy ETH now, thank me later. And that was at 2,900. What is it, ETH today? I'm not sure there are many people thanking Eric Trump if they bought ETH at 2,900 and now it's down at 1,800 or 1,900. Very confusing. There just doesn't even seem to be any reason why we would be thanking him later. There hasn't been any announcement or news on that. And it just shows you price is truth. Trade the charts, and you've got to be very careful make your own financial decisions. Even everything that Josh and I talk about today, ultimately the buck stops with the person that clicks the button to buy or sell, and that's the person at home watching this, to make your own financial decisions and to do your own research, and just to be careful, because I think that guy held a lot of weight with people, and people bought based off that there was something he knew or something special, and maybe he did. Well, if he does, then maybe share that when Ethereum's at 1,800, not at 2,900, and you're already $1,000 down per coin.
Yes. All right. One other story I found was interesting, Mark. GME put a Bitcoin put out there, or a Bitcoin hedge in their business. They're going to begin to accumulate it as a strategic reserve. Is this a last ditch effort to be relevant? Is this a strong strategic move which will differentiate them in the days ahead? I'm curious your opinion on it.
I think both. I think they want to stay relevant, and it's a strategic move, but it's a last ditch one. And so I think it's a bit of both. I think they're realizing, what Michael Saylor has done with Bitcoin, and you see that now other companies are starting to do the same. Even there's a stock that is doing much the same with Solana, and you've got Barry Silbert, who's got other trusts going with other coins, trying to create that kind of effect. And I think companies are starting to look at that now. And so I would think it's a little bit of both.
I would agree. Now, this is interesting, and it plays into something I talked a lot about over a year ago. This next news story, that U.S. Bitcoin mining woes deepen.
Yeah.
The underlining story is that they've lost $6 billion in March. Now, when the price of Bitcoin comes down and the price of power goes up, this is where these companies get squeezed. Back in the last crypto cycle, there was a handful of Bitcoin mining companies that were publicly traded. Now there are hundreds and hundreds and hundreds. And I talked about this a year ago, that BlackRock was a shareholder in all of them, because they want to get a seat at the table when it's time for them to ask for more money to keep the lights on. And I also gave this as a reason why, when the institutional investing began, that there would be reasons and causes for Bitcoin not to go up to $250,000, but instead to run up and then to crash, because there was more in it to get consolidation and ownership of Bitcoin from a vertical integration financial model than there would be just to run it up and be happy that they own it. You're not thinking like the filthy rich. So the bottom line is, the Bitcoin miners are in trouble. They've lost $6 billion in the month of March alone. They're going to be out scrambling in this high interest rate environment to get a hold of some cash so that they can pay their employees and keep the lights on. And now companies like BlackRock are going to sit down at the table and begin to deepen their grip into the overall infrastructure of Bitcoin. Any thoughts, Mark?
Yeah, look, I think that we've seen the minor capitulation, and that has usually been a fairly reliable indicator for being close to or around a bottom for Bitcoin. The hash ribbons indicator has flashed a buy signal, and every time that has flashed a buy signal, yes, there has been at times where Bitcoin has gone a little bit deeper and a little bit lower for a little bit longer, but has generally been a sign of a reversal signal there. And so you can add your indicator on there on your trading. I don't know if you can share my chart there, Josh, and I'll just show people that this might be something that, because historically this does not happen very often, Josh, in Bitcoin's history there. And so you can see this hash ribbon indicator, when it flashes green, that's warning, and you know that there's more capitulation to come. But when you get that blue buy signal, that doesn't happen very often. You can kind of go back in Bitcoin's history and see the last time that actually happened, Josh, was back here in July. And you can see what happened. There was a little bit of downside. You can see there was a final capitulation to the bottom. And then we just took off from around 58,000 all the way up to 109,000. And then again, if we go back a little bit further, again, you can see how this does not flash very often here. You can see how low the price was when it did. So here's the more previous time that it happened, back on the 7th of August of 2023. And again, we did see another 2, 3, 4 weeks to the downside there before we took off from around 27,000. So I think this, and you could actually go back and you just add the indicator here. You just click on indicators and just search for the hash ribbon indicator, and you can add it to your charts, and you can go back and back test this and see that it's been a very, very reliable buy signal for Bitcoin. So I think it's very unlikely that the Bitcoin bull run is over. I think we'll see, we could see a little bit more downside. We could flush down to 73 or 69 still and be in a bull market. But I do think that's a positive sign for crypto. And I think the miners, they've capitulated. And I think they'll everybody's happy to see that blue buy signal on the hash ribbons. And I think that could spell some hope for the miners, because, if Bitcoin goes on and makes a new all-time high, those miners are going to really need that.
I really appreciate that breakdown. And I can go back to my recent memory of the 2021 crypto Bitcoin top. And I remember when this same indicator came up, and I remember when the miners were struggling, and it aligns perfectly with the narrative that I'm giving you, or the bias that I'm giving you towards the markets, that we're going to end up with a V-shaped move. I think that Bitcoin, that signal is a signal that we are getting ready to actually go lower. But that's going to be this next big buying opportunity. It's going to be the same for stocks and crypto. It's the reason why I'm doing this video today. And I've got some other very interesting technicals. I think that was a huge contribution, Mark. And yes, when the miners are very close to struggling, the same thing happened in the last cycle. That's around the time that it produces another buy signal. Now, one of the big problems that we have to solve, which I don't even know that we're going to solve today, is if we do get that V shape and we do get that reversal, how high are we going to go? Are we going to make a lower high or a higher high? We'll get to that here in just a little bit. One more news story that I found interesting, and I can't pass on discussing it, which is that we actually had the Washington, D.C. Bitcoin audit results came out. A lot of people had only speculated how much the U.S. owned in Bitcoin, and they thought it was anywhere between 200 to 250,000. I heard the 250,000 number a lot. Well, it turns out that we own right around 198,000. Okay. And for interesting perspective, that's a little bit less than 1% of the total supply of Bitcoin. And having this audit done puts a lot of things into perspective, such as how much Bitcoin does MicroStrategy own and who has the most. And it puts a little bit of incentive on the table for the United States to begin to buy and not be in second place. And so I think this audit was bullish for crypto and bullish for Bitcoin. And I believe it's going to drive buyers' interest. Mark, what's your thought on this news story?
Yeah, I think it's important that that audits happen for sure. There's no point speculating. I mean, people are speculating about the gold in Fort Knox, and I don't even think that's been audited. Some people are speculating that all this gold buying is being done by Fort Knox to fill it back up.
Yeah, I
there
saw
was
that.
nothing in there. I don't know what you think about that, Josh, but I thought that was funny when I read that article there, and that could well be the case. I mean, they talked about auditing the gold at Fort Knox, and they haven't done it. I'd like to see the gold audited at Fort Knox. Now that they've done the Bitcoin audit, let's do the gold audit as well.
I think it's an area of immense interest, but I was chatting with my buddy, Stock Up with Larry Jones, and we both agreed at the end of that conversation that if the gold's not there, they don't need to put that on live TV. That would cause some serious stress to the U.S. dollar and to the U.S.'s standing in the world. And so, I do believe that we need to audit. I do believe that we need to drain the swamp, but we need to be careful because the economy is this massive, giant juggernaut, as I described at the beginning of the video, with massive consumption, massive GDP, and massive profits for Americans. But the fact is that that type of large organization can be turned very easily. That's why we've got a Fed and a group of feds that sit and deliberate over the smallest changes in the interest rate because it affects the world. All right, let's break down some interesting technicals on Bitcoin. I'm going to cover two, and I'm going to share with you one. I'm going to teach you guys a little bit about it. Some of you guys may already know all about it, but we're going to talk about the MVRV score. And now this is actually, I chose this because it was actually the #1 trending chart that people were commenting on. And this is a tool, and to give you the brief explanation, and I'll take you to it and I'll show it to you. And it may not help you too much because you'll be looking at it and going, well, I don't really know what all that means, Josh. So basically, this is all about trying to determine the probability of whether or not the top is in the past, behind us, or ahead of us. Studies and analysts basically post this, and they've noted that the MVRV score, when it exceeds 5, so 5, there's a 94% chance of a market reversal or that it's hit the top. And at 7 plus, the probability rises to 100%. And so for perspective, we are way down here under 2. And the highest that we've got was right here, right around 3. Okay. So basically around 3.5. So I want to repeat this so that it's super clear. This has a lot to do with how the feverish buying of Bitcoin is expressed within a chart, and it indicates when the asset has sort of hit its top. And it's sort of basically what everybody, how much they've spent on it and how the price changes. And it's been very consistent gauge over time. Now it is coming down. We know that momentum and volume is coming down. A lot of people out there in the retail community have been deceived by, I won't be honest with you, by other YouTubers who have told them that because of institutional buying that this is just a new event or a changed environment, or that this is a macro that Bitcoin has never crossed before. That's not true. You can see clearly in the chart that with all of BlackRock's involvement, we have some of the lowest volume and the lowest momentum yet seen. Well, if I say that, then people will say, well, that's because it's getting ready to rocket and hit $200,000 in the days ahead, Josh. What this chart tells you is one simple thing. It tells you where the MVRV score is. We're sitting at 2. It would have to be halfway. So you can see this third peak on the right. And I can't draw on this screen. I wish I could. But you got the most recent peaks are very small. It's currently under 2. You go back to the last cycle, and we hit close to 7. And what they're saying is we would have to hit at least a 5. And if we hit 5, there would be a 95% chance that the top would be in. And we are nowhere near it. So unless Bitcoin, with all of this international interest, a president who's called himself, the first pro-Bitcoin president, unless Bitcoin is totally dead, and it cannot be raised back to life, the MVRV score is telling us that the top is not in. So I thought that would be very, very interesting for you guys to see. So at 1.69, which is what the current score of the MVRV is, there is less than a 5% chance that this will go down from here. Okay, so there's less than a 5% chance that the top is in from this chart's historical perspective. We have to get up to at least 5 or 7. Now, if we got up to 7, that would put Bitcoin at a final price of 132,000. And I have predicted in the past that we would likely get, if we did make a new high, that we would get right up under 120,000, which is a huge psychological level, somewhere between 114 to 116,000, which would put us on that MVRV. It would put us right beneath 5 at about 4.5. And so I think that's a high probability. And if we went off of just that chart alone, fact is, it tells you that we really haven't made the push for the top yet. And I'm going to tell you that the way that we're going to look back on this Bitcoin cycle is that it's all going to be chopped up to Trump's tariff war, World War tariff. It'll be the explanation as to why the Bitcoin top had been sort of cut off or dwarfed by the macro events of the early part of 2025. That'll be the reason given. And I believe that even though it wasn't what a lot of people had thought would happen, it's going to change the rhythm of the top of Bitcoin, and it's going to be a prolonged, extended cycle. And I believe that we're still going to make another push. Now, the problem with that is that that idea and that logic is dependent upon the macro environment improving. And it's also dependent upon my idea that we'll have a V-shaped bottom. Now, all of this leads me, I'm going to go into one more important chart. I'm going to get Mark's opinion, but all of it leads me to where I'm going to predict Bitcoin is going to go next. But Mark, what are your thoughts on the MVRV chart and what it says?
Yeah, I think the MVRV is probably, along with the Pi cycle top indicator, two indicators that are most frequently and the most weight is put upon both of those indicators. So neither of those have shown any kind of a top coming in at the moment. In fact, there's a great indicator on TradingView called the Bitcoin Top Indicator. We can type in BTI and it will actually combine the MVRV, a Pi cycle top indicator, the NUPL indicator, which has fairly accurately called the tops of Bitcoin as well. And it will actually combine them into one indicator. And it's been very, very accurate, showing. And that's, again, I've got that on my chart at the moment, and there's no top in sight. So I think these things are very important to keep an eye on, and have data like this coming in, because I think this can be very helpful. But yeah, I would be very surprised if we went into a bear market from here.
All right, I'm going to give you one more indication, and this is how I correctly timed the bottom, and I think it's going to help me potentially correctly time the top. Now, what it is that I predicted so far in this cycle was really back in February, and I said that we could not afford to lose 90K in the month of February. Was it February or January? I have to go back and actually look. I've lost track of it. Let me go look at the chart. I think it was February. Yeah, here we go. So November, December, January. Yeah, it was in February. I said that we couldn't afford to lose 90K in February, or that we were going to enter into a huge contraction, and potentially we would have to reconcile the idea that the top might have been in. I don't believe that the top is in right now. I don't, and I'm not predicting that, right? And I'd said that we had to maintain, I can't remember, I think it was 85. We had to finish the month of March above 85, or we were going to make a lower low. And that has also, it hasn't come to pass yet, but it looks like it's very close to coming to pass. Now, I'm going to show you this important indicator, and we're going to be looking at the 200-day moving average, which isn't anything special, but the facts that I'm going to give you and the research that I'm going to give you on that indicator and why it's relevant and how it relates to the timing of the top and the bottom, that's the part that's interesting. Let me show you that chart real quick, and we'll talk about it. All right, I've got on the daily time frame up the 200-day moving average, and here's what I want you guys to see. When we get officially into the bull run, which is classified back here, so we're talking about 2021, you can see that this thing rockets up, and it spends very little time beneath the 200-day moving average when it's in its up move. But it does when it begins to level out and it begins to sort of sort out the top. It does spend some time beneath the 200-day moving average while and before it's made its all-time high. And so I went back and I looked at all of the days that it spent underneath the 200-day moving average when it went on to make a new high, which it did that right here. And I averaged it out to between 40 and 50 days. And what's interesting is that here, this is when the new cycle began right here. And you can see that we've had a few pockets of consolidation so far under the 200-day moving average. And so the question that you might ask, or the question that I asked myself is, have we spent more days under the 200-day moving average than we have in previous cycles? And drum roll, the answer is that we have not. So the typical cycle is 40 to 50 days. And as of today, that we are underneath the 200-day moving average, we've only been under it a total of 36 days. Now, what I find interesting about that is that this is how I timed the bottom. I took into consideration the macro events, the news events of the time, and I was looking very, very closely at how long the cycle was. And at the time, it was between 409 to 430 days that I estimated that the winter could last. And then we had FTX collapse, and we got this huge move down. And I knew that between the macro and the timeline that the bottom was in. And I'm going to tell you guys that we are getting ready after we've had this period of consolidation that's been heavily affected by World War tariff. And we are been underneath the 200-day moving average for 36 days. I'm going to suggest to you that we are 1 to 2 weeks away from hitting this local bottom before the market begins to do a V on Bitcoin and push it up. The purpose of this video is to give you guys plenty of time to prepare. The purpose is not to, first of all, you do what you want with your money. I'm assuming that all of you guys are paper trading, but you have 1 to 2 weeks to potentially prepare for a flash down that I believe will be completely in line with the next big wave move up. And we could then take this step back and consider that our timeline is somewhat potentially aligning with the macro events of the day, which is what? The fact that Donald Trump just came out and made this absolute shock and awe tariff war announcement, and we're going to see people come to the table to work out the deals. And how long do you think that'll take? I think it's going on right now. I shared an article yesterday that European countries were, the quote was, scrambling to get a seat at the table to take care of their economies and their long-term relationship with the #1 consuming nation in the world. So how much could get worked out in the next 2 weeks? What type of V-shaped down are we going to get on Bitcoin and on stocks in the next 2 weeks? It fits. And so we're going to get an additional move down over the next week. I think tomorrow's going to be ugly, potentially. I think next week could be ugly. We're moving towards the CPI report for March. And I think that it's been sort of a sell the rumor, sell the news event. And this could be the final capitulation point in everything. And so that's how I'm looking at it, and that's how I'm getting myself squared away. Before I wrap up this video, I've got a couple other very important topics. I'm going to give you guys exactly what's on my altcoin list to buy, and we'll hear from Mark. What is he looking at? So I'm going to share with you guys sort of we're going to ask the question and answer it. Should I sell all my worthless alts right now? And but before I go on, Mark, I'm just curious your thoughts on my timing and my analysis on the 200-day moving average.
Yeah, I think it's very good. And I think it gives a little bit of perspective to the drop that we're having right now. And of course, with the hash ribbons indicator, usually there's you could see from historically the last couple of times, there has been a little bit more downside for a few more weeks after it goes. I've been keeping an eye on the 50-week moving average, because historically in the last decade, the bull run has not come to an end until there is a full weekly candle that opens and closes below that level. Now, that level right now is sitting at around about $76,600. And historically, that has always been a bear market. And funnily enough, what will happen is there'll be an open and close, weekly candle open and close, be below the 50-week moving average. There'll be a dead count bounce up to, guess which level, the 200-day moving average, and it rejects off there and capitulates to the downside. But historically, in bull markets, whenever Bitcoin has come down to that 50-week moving average, that has been an incredible time to pick up and buy. And so I think we're at a precipice right now that if the bull run is going to continue, these are these last opportunities to buy for these next couple of weeks here. Like you say, there could be a drop down. The big drop that we had in April and May of 2021, when Bitcoin went from 65,000 down to 28,000, Bitcoin actually wicked under the 50-week moving average, even had a little close under there, a little itty bitty close below there, but did not open and close below there. And that was that last chance before it took off all the way to 69,000. So I would agree with you that we could see one further drop down to that 50-week moving average, that we don't see a full open and close below it. If we do, I'm going to change my tune, Josh. I'm going to be on here with you, and I'm going to share that I think we're more likely in a bear market. We'll have a dead cat bounce and capitulate further. But while we stay above that, I say bull market, I say V-shaped recovery, and sometime in the next couple of weeks, I would be hopeful that we'll start to see some movement to the upside. And that 50-week moving average is something that I'm keeping a very close eye upon.
I love it. Okay, so let's go quickly look at the Bitcoin chart, and I'm going to just give you guys my final analysis and what I think is going to happen. And we're going to rotate between the feeling of bullishness and bearishness today because we're in that kind of environment. We have a pretty ugly chart right now, and again, the premise of this show is that we don't have things worked out. We are in sort of a strong, tight, down sell-off pattern. We're seeing that in stocks. We've just gotten an extremely ugly wick. Let me show it to you guys, and then I'm going to go through the lines in the sand, where it is I'm going to begin to buy. I'm going to tell you guys right now, look me in the eyes. This is where I'm going to buy. So just hear me. This is the trade plan I'm putting in place. This is the risk I'm willing to take. Let's pop over to the chart. Let's talk about how initially it's pretty darn bearish. We talked about the fact they were under the 200-day moving average. When we go back to 2021 and analyze the price action when it was sort of similarly hugging up and underneath the 200, it had a huge capitulation moment before ultimately moving up. So I am expecting another capitulation moment. And guys, look at this with me. Okay, this is clearly a double top. Clearly, this is a huge rejection wick. Okay, I am expecting this thing to fall off the shelf here tomorrow. This is ugly, guys. So, I don't know how each of your levels of charting is. I can only speak for myself. This chart tells me that we are not looking good right now. And if we end up, news could change it. But like I said, we're underneath the 200. We have a double top. We have a profoundly ugly candle. We've been sort of slowly skimming along the bottom of this shelf. And by my experience, what do? You fall off the shelf. Now, let's pull in some important numbers here. Let me see if I've got them. I think I've got a different chart. I'm just going to write them on because I've got that. I'm on the index chart. I think we're going to go to 73,000. And that's where I'm going to do my heavy buying for everything. And I will jump ahead and let you guys know that I think we're going to find support at 73. Look at that. I actually drew the line to where I thought the price would move. 73K is right there. Okay. It aligns with past moves. It gives us a lower low. It gets a lot of retail to capitulate and freak out. But again, I'm going to explain this to you guys because I'm telling you the future today. The future is that when everyone else panics and sells and tells you that it's over, a year or two later, they're going to tell you that the only reason why those events happened was because of the macro event. All right. That it wasn't foreseeable right now. Now, we really shouldn't be in this spot. We are uncharacteristically not where we should be based on previous bull runs. However, this pattern was a little bit similar to the last cycle. So it's just not as similar to the previous two cycles. It's more similar to the last cycle. Now, I think we're going to be different than the last cycle as well. I think we're going to hit that 73, and I think that it's going to be within the next 2 weeks, and I think that's going to officially give us a V. We're going to finally see volume flood back, because within the next 2 weeks, we're going to probably get some deals starting to flush out. And Wall Street doesn't wait until every deal is flushed out. They begin to act early. They're going to be looking very carefully for any hint of a good news or enough good news. I'm not telling they're going to buy heavy on the first story. They're going to principally be looking, I can tell you right now, Canada. Canada is an extremely important trade partner for us, right? They all are. They all are, but that's going to be one that needs to get resolved sooner rather than later. Of course, Mexico needs to get worked out, and Britain needs to be worked out. But when we begin to see a couple of these, it's going to be enough to turn the tide and shift, especially if we get a ton of selling like we did in the COVID 2020 environment. So 73,000 is my target. The MVRV chart suggests that we could get all the way up to 138. My technical fib analysis suggests that we could possibly get 114. But I can tell you that if I buy heavy at 73, I can be very, very profitable come 93. So we don't have to get to 130 for me to get richer. We don't. And so it's going to come down to that same story, that you're going to be able to do well based on where it is that you got in. And I think that's what I see coming in the days ahead. A move from 73, possibly all the way back up to 140, would be a near 100% move for Bitcoin. And I'm just going to remind you guys, everybody will know that we are going to be closer to the end if we get that extra pump. And so they're going to be quicker to take profits when it begins to slow down. And so we're going to be fighting an air of bullishness, but we're also going to be fighting some impending fear. Now, there's a lot of people that believe that we're going to face a second wave of an economic slowdown at the tail end of 2025. And so I do believe that this is going to be, as I've been saying, it's a trader's market. I see a ton of opportunity. And I think that the next opportunity for stocks and crypto is really close. It's 1 to 2 weeks away. And that's my target for Bitcoin. Mark, what are your thoughts?
Yeah, no, I would agree. Somebody made in the comments, does that line up with what you say? Just share my chart there if you can for a moment,
Yes.
Josh. There, I'll show you what Josh is saying and why I agree with this here. So you see the 50-week moving averages, this white line here that's coming up at 76,597 at the moment. What Josh is saying is a capitulation down to 73. Look at this wick here that went from 80,700 all the way down to 76. So that was a huge wick here of about $4,000 to $5,000 down there. So what Josh is saying is that you can see this capitulation event. So a wick from here, and this didn't close below this trend line, by the way. It didn't even close below this Fibonacci. A wick below the 50-week moving average of $4,000 would take us down to 72, and we still wouldn't be closing below the 50-week moving average, let alone opening a candle and closing a candle. So the important thing to note is we don't want to see Bitcoin open and close a candle below. And to do that, first of all, it has to close a candle below there. A wick below is fine. Look, we could wick all the way down to 69,000. And as long as we don't open and close below that, historically, Bitcoin has been okay in its history. So, and to add to that also, there are over $20 billion worth of longs that will get liquidated if Bitcoin goes down to 73,000. There is a big hotspot of a lot of mass liquidations would get down to that level. So yeah, I wouldn't be surprised. I've been sharing on my YouTube channel that this here, I would be surprised if we didn't come down and hit this before going up, because it would make sense for that liquidity to be grabbed without having an open and close below this and having that V-shaped recovery, like Josh says, before moving up.
I appreciate that. All right, let's talk alts. I'm going to share with you guys these things. Why have the alts suffered the way that they have? And again, you know, it's like on this show, I make friends, frenemies, and sometimes enemies. I want you all to, be happy. But unfortunately, I've got to tell you today that when I say almost all altcoins, I'm really being sincere. Almost all altcoins are useless. These are completely useless. They're speculative technology assets, no different than some really cool penny stocks that I've invested in over the years that have a great idea, but they don't have any money. And so they're not profitable. They're losing money, and they're constantly trying to be the next big thing. And they're constantly doing a share offering. And, everyone that invests in them too early gets left behind. Altcoins are not the technology geniuses that you think they are. A lot of them are copied contracts off of other past, blockchains with a slight new spin to them. Now, you guys accept that when I say it about the meme coins and Dogecoin, but a lot of people would refuse to accept it when I talk about, other technologies that are known for a lot. But the fact is, the market throws these away every time things begin to get tough. That's the reason why we see alts down 90%, is because the fact that they got dumped is because in a difficult environment where people need to get a hold of their cash and protect it, these are going to be the first things that people get rid of. And I'm going to go back to something that Mark said about the fact that the altcoins, now I'm not saying this. I don't believe it just yet, but I believe it's partly true that we're not going to see all of the alts have a rip your face off rally and make new highs. I think that some will and some will not. I think that's where we're at. So now, if Bitcoin would just have to do so much more than I think it's going to do. Remember what I said. I'm going to buy heavy at 73K, believing that this is going to be an opportunity of reversal in an extreme panic and fear environment. And again, I only have to get back up to 93K. And I'm talking about Bitcoin, but I'm referring to any crypto. So I'm just using it as a general gauge of when I see that Bitcoin hit 73K, that's when I'm going to go over into my altcoin trading account. And that's when I'm going to begin to buy on a slew of altcoins. What are those altcoins? I'm going to give them to you here in just a minute. I wanted to talk, but I wanted to be clear that I left this impression upon you because you don't get this on every crypto channel, that altcoins are by nature essentially useless. Their stories, their hype, their opportunities for the future, they've yet to utterly find their way within practical environments and practical goods. Why? They don't have earnings. Now, come on, guys. You know this already. Apple, Meta, they've got quarterly earnings. And if their margins shrink even slightly, it doesn't matter how big or rich they have. It doesn't matter whether Apple's got $140 billion on their balance sheet. Apple stock plunges. So you understand it for the nature of stocks, but somehow refuse to apply it to your understanding of crypto. There are no earnings. There is no publicly traded, economic information or financial information here. These are, when we talk about speculative assets, they're way speculative. Okay, so just keep that in mind. No use cases and changing technology, which means this. From each crypto cycle, somebody's doing it better. Somebody worked on some other team in the last cycle, and he thought, you guys are knuckleheads. I'm going to leave. I'm going to get a couple of my cool nerd friends together, and we're going to reinvent the whole thing because we're way smarter than you guys. And that's how we get new projects like Sui and Ondo and companies like that. They turn around, they find rich people that don't want to buy last cycle's coins, and they create a new alliance, and those coins emerge. And so we're going to see these consistently die off. More coins were created this cycle than any other cycle had ever even imagined. So this was another issue with the cycle, was there wasn't enough money to spread across all these coins and all these speculative projects. So no use cases, changing technology. Remember that I said that. You should not hold anything through the winter. I myself exclude Bitcoin alone for that. Bitcoin alone is the only thing that I have become afraid to sell. And it's something that I think is more of like gold in my mind that you put in the safe and you stop messing with, because somewhere along the way, you're going to sell it and you're not going to buy it. And it's not going to do what you thought it was going to do. And then something you owned between 50 and 70,000 or even 20,000, it's going to go up to $250,000 and you're going to be kicking yourself. So somewhere along the way, you have to stop selling Bitcoin. And that's where I'm at with Bitcoin. But the alts, to me, they're not what a lot of you think they are. So that is the sober, cold, wet blanket I had to throw on everybody today. Having said that, I do have altcoins that I like that are in my top 10, you could say, and these are the ones that I'm going to go to buy. Before I give those to you, Mark, now that I just crapped on the entire altcoin, and your everyone's YouTube page, let me know your thoughts on that.
Yeah, and look, I'll make this my final thoughts for the evening because I've got a pre-existing appointment to get to there, Josh. But if you can just share my screen there for a moment. But it's very true that I would say that most altcoins just aren't up to scratch, and historically, most altcoins go to zero. There are some that are developing some great use case, and I think we'll have some good future use. And I do agree with you that I think some altcoins are going to continue on with Bitcoin when Bitcoin makes a new all-time high, but some altcoins just won't. In fact, most altcoins won't. But I will say this about, if you look at total 3, again, historically, the 50-week moving average here, when there has been a open and close below that, that has been a bear market for the altcoins. Now, I'm going to show you something that's quite shocking, because total 3 is the altcoin market minus Ethereum. Total 2 is the entire altcoin market with Ethereum. Let's just have a look at this chart, and you can see that we have had a full candle open and close below the 50-week moving average when you include Ethereum in the altcoin market. This hasn't happened before. Back in April and May of 2021, yes, we tested these areas, but we never had total 2 go and make a full candle open and close below. And so I've been going off total 3 for my altcoin chart to say, are altcoins in a bull market? I think Ethereum's bear market territory. I think it's in a bear market. I think that that doesn't mean that it can't rise with Bitcoin, but such has been the underperformance of the second biggest crypto in the crypto space. So the coins that I'm looking at the moment, obviously Sui and Tau. I still there's Solana trading, but for me, these are still trades for me. I'm not prepared to hold any long term. I'll go in on these trades. I bought Sui at $2.25 about a week and a half ago, rode it up to $2.79. It got rejected. I sold it, and then, but if it had kept going, I would have just stayed in the trade. So what I'm hoping will happen, what I believe will happen, is that one of these buys I make as I'm swinging Sui and Tau and Ondo, is that these coins will actually continue on with Bitcoin, and I'll be able to hold them for longer as they make new all-time highs. That's my personal strategy at the moment. But while we see altcoins so close to the brink of going into a bear market there on the 50-week moving average, I want to be risk off. Bitcoin is the only long-term hold for me, but I am hoping some of these altcoins that I'm buying at these low levels and swinging and selling every time they reject. And look, Sui went up to $2.79 and then come all the way back to $2.20, where I was able to get back in. I'm hoping, like you say, the bottom will be in the next couple of weeks, and these altcoin swings that I'm buying right now at these lows will turn into longer term plays for me. But that's how I'm playing at the moment, and I'll leave you with that, Josh. Thank you so much again for having me on the show. It's always an honor and a privilege to be with the Stocks with Josh fam. I appreciate each and every one of you. And Josh, thanks again. And we'll see you all in another upcoming episode, I'm sure. I appreciate that. And I'm definitely going to have Josh on my channel. Now I've relocated and set up properly. We'll get Josh over on the Tribal Trades YouTube channel. It'll be great to have you over there. We've been talking about that, I know. But thank you again.
Thank you, Mark.
And I'll leave
Mark's
you to
got
it.
a hard exit, so I'm going to say goodbye to him. Mark, thanks for joining me today. I'm going to switch over to just myself here and wrap up this show, guys. A couple things I wanted to go over real quick. I'm going to give you guys the alts that I'm looking at, and I know that I'm going to get a lot of what about this one and what about that one. There are other good projects other than the ones I'm going to list. Before I did, I wanted to mention it's not my birthday today. There was someone else in the Discord whose birthday it was. I believe it was JD. If I got that correct, people were wishing him a happy birthday. But thank you, everybody who is considerately wishing me a happy birthday. My birthday is in August. Let's go over my master list of coins that I believe are my go-to. This does not mean that these are the fastest moving cars. What it actually means is that these are charts which I see in my sleep. If I close my eyes right now, I know exactly what each candle looks like. These are charts I'm familiar with trading, and they're ones that I believe are dominant, and so they're my go-to. Again, this is not the best cryptos of all that will give you the best gains, but I like them. I'm going to go back to Solana. I'm going to go back to XRP because it's got just fabulous liquidity. You can become super rich trading XRP. I had massive $60,000 days trading XRP when it started to skyrocket. And I'm imagining that if liquidity ever comes back, it's going to be one of my #1 trading vehicles for making big bucks. I'm sad that all the liquidity has dried up within crypto because that's going to be a coin that's going to have a ton of movement and it's going to be going up and down. ADA is back on the list. ADA's become very relevant and interesting. SUI has been a bread and butter of this last cycle. Ondo is a little bit more. I'm probably going to trade it less and buy a big chunk of it and let it see where it goes. I have Cake on my list because I like to keep a close eye on Binance and what they're doing. And because of that, I sometimes get into BNB, but that's not one of my fastest go-tos. Link, AVAX, AVA, and Doge. Maybe ETH. Maybe. ETH never really gave me much. I didn't lose money on ETH. I only ever made a little bit of money. It didn't give me much money this cycle, but maybe it'll have an incredible turnaround moment. I'll at least be watching the chart. I appreciate all of you guys who joined me today. I think we covered a lot. I thought Mark did a great job. Please go over to Mark's page and hit the subscribe and follow him. I think he offered some very insightful technicals and ways of looking at how we know where the bottom and the top is. We both kind of look at it a little. We have the same view on some things, but we approach it from a different perspective. Right now, I believe, as I said, we are 1 to 2 weeks away. We are 10 to 14 days away from having a huge moment. In my mind, if we begin to see this thing fall off over this weekend and the beginning of next week, or when we get to that March CPI and we hit that 73K on Bitcoin, to me, that's going to be the spot where I'm going to come out and do an emergency live and let you guys know that I'm buying. That's all I got for you guys today. Someone asked a lot if I would cover Tesla. Tesla's looking good to me. I like Tesla. I'm in Tesla right now, long on some call options, but I don't have a huge position size because of how shaky the market is right now. I also like Google. It's holding up pretty well. I like Intel right now. I like Costco right now. You get more technicals from me on a daily basis, as well as my daily trade setups when you come and join the Stocks with Josh Discord. It's a fabulous community of a lot of like-minded traders who are helping each other out. Appreciate each and every one of you guys. Peace and blessings. We'll see you tomorrow.